Good evening all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday the 21st of June 2021, just getting on to the 6:20 time frame. Now, this coming Wednesday the 23rd, I'm going to be holding my What's Up live webinar. You're invited to attend. I opened the door for it at 12:15. We begin promptly at 12:30. I made a mistake on the last one. Some of you couldn't see the chart. You could hear me perfect. I made that mistake and I wasn't looking at a box to see you were having a problem. That won't happen this time. So we'll get it all going and going right for you. So now what do we have? We have the little Fed minions all running around talking about these two think that the market, yeah, we should be talking the tapering right now. Others coming out, no, I don't see the case for that whatsoever. And tomorrow Congress gets to drill Fed Chair Powell on it. Now that's what all eyes are going to be on. Remember, this is the man that just told us in a press conference, well, they're talking about when, and then Mr. Bullard came out and I watched what he said and everything. I got the impression he said, no, they've opened up the table to now discuss when the tapering's going to begin. So the cat's sort of out of the bag. And Mr. Bullard often acts as the point man, if you will. I don't know why, but he does, for Mr. Powell. He's not a voting person, by the way, on the FOMC committee either, which I find fascinating. He's very vocal about his opinion, but he doesn't get the vote on it. But we're starting to get an idea of what's going on through that. As you know, last Wednesday, which seems a lifetime ago, the market cratered. It was just a question, if it kept building, when do we get a solid bounce? And that bounce happened today in the stock indices. Wish I could tell you the reason why. Markets eventually find a level that they get comfortable with, and then the shorts say enough for me, and away you come out of the market too. So when you look at this, how much damage did we really do? Do you think this chart's been hurt on an S&P 500 of weekly area chart of closes? I personally don't. I can see the market drifting around here. It hasn't flashed any new signals the way that I look at it. We had this monster break. You can see this. You extended it today. You got even lower, and then you had your reversal, and now the market is coming up. It hasn't quite taken out the highs of Monday, which were 42.20. You've gotten as high tonight as 42.1975. But if it does, it'll create something of a bottom in this area for a lot of chartists. We have to see if that's going to occur. But let's take a look and put the swing line on it. You're not trending. You have a higher high and a lower low apex. Not a trend. Where's the moving averages? You tell me, and I've been telling you since last week. The battleground's the 18-day average of closes. If you can't see it, I don't know how to make you see it. We've done this before. We've had battles. So far, it's been able to resolve to the upside. Until it changes that pattern, I have every reason to believe what happened before is going to happen again. I don't think the Fed's just going to come and say, okay, we're tapering, it's all going to be over in March. We're going to just start it in September and end then. I don't think it works that way. Not if they're data dependent, and not if we're hearing everywhere you go there's labor shortages. Commodity prices have gone into a collapse with the exception of oil, but other commodities have collapsed. It's the way I'm looking at it. When I look at what the market's done here, you're caught in the Bollinger Band from the top to the bottom. Did you take my enhanced Bollinger Band course? If not, go to our website under education, do it. This is exactly what you learn to work within. And this market had the longs get out, the shorts get out, and I think everybody's sort of neutral right here. Momentum, no longer pointing down. This is how the market momentum was on Friday. This is how it looked at the close on Monday, and this is what you look like tonight. So I call this a pretty neutral chart. The bias, neither way. In the NASDAQ, where's my bias? Upward. Why? I still have higher lows, higher highs. I still have the embedded reading. Target, still the upper Bollinger Band. If the red line closes under 80, then I'll look for the 18-day average. Until it, I think the pros are buying. Again, you want to get that enhanced Bollinger Band course. Next, the Dow Jones. All right. Where did the Dow find its support? This is the 100-day moving average of closes. So it went first through the Bollinger Band. This is where I think right here on Wednesday the 16th, I think the pros were out of the market. Why would you play on the Fed to begin with? So you went from basically an upper band to a lower band. The market, remember the yin-yang that I gave you the whole explanation, how when the Fed comes out in the afternoon with their statement and then the press conference, what time is it in Asia? Then it goes around to Europe. And here's what happened. The market started feeding on itself. Well, now the market's come back and you're getting a bounce in the market. Okay. Today's high of 33,812, that's where you're at right now. The high on Monday was 33,808. So this will figure in to be a trade bottom temporarily because it's an apex and you climb back into the Bollinger Band. You're no longer in the sideways action of the Bollinger Band. You've had a downside breakout in the Bollinger Band. So on a rally, I think that the market's going to be looking at a lot of resistance between here and the 34,198 level. In the Russell, from the upper Bollinger Band to the lower, again, the 100-day average, the lower Bollinger Band. Okay, what's the trend? Down. Where's the resistance? 22.95 and a quarter. The problem is you'd have to risk all the way up to this high, and that high in the chart is 23.46. That's an awful big risk. I mean, when you're looking at that, you've got about a 50-point risk. I think it's too much for many traders to take on. So I want to say the market's acting like it wants to bottom. It is not acting like it's in an uptrend. There's a difference. In the VIX cash, I told my subscribers of my morning subscriber videos that I thought the pros went short into the Bollinger Band and the 100-day average on Friday. And this is where they're at, and I think they're looking for the 18-day average to be hit, and they'll cover. And how do they go short? They typically write calls. That would be because you don't want 100% delta. You're trying to cut your risk down. You'll take a slice out of the middle. In the September 30-year bonds, where's the market failing? Up at the upper Bollinger Band. Do I ever teach to buy over an upper Bollinger Band? Have you ever heard me say it here? You have not. That is where I think professional money steps away. You have an overbought market in an uptrend that's starting to fail, and it looks to me like a big reversal today took place, where the final longs that had to get in there crying uncle from being short bought out, and the market just let go on them. How do I know? Because I was probably one of those guys early in my career. It just looks like the patterns I would inevitably do until I learned all about the Bollinger Bands and the other parts. And doesn't mean I'm a winner, but it certainly doesn't mean I get caught like that. That I'll say. Higher high, lower low. Where you're back to, the 100-day and the 18-day average. You're basically, not quite, you didn't quite hit that lower band, but you're playing the same thing right in there, and you can recognize that. Now what's going to happen? Well, tomorrow, all of these, the bonds, the notes, they're going to be data dependent on one person tomorrow. Who is it? Fed Chair Powell. Every word he says, they'll be listening to. Dollar index, we had a big run over the upper Bollinger Band and you pulled back inside. But you could embed, you could get more bullish here. Remember, all you need is 3 days in a row of closes over 80 in both these numbers. Day one was Friday. Certainly day two was today, and we don't know where you're going to finish on Tuesday. And at that point, I'll have a game plan if it happens, and I'll have a game plan if it doesn't happen. So that's what I need, and it's the flip-flop of that in the eurocurrency. In the euro, if we take a look at today, both numbers were under 20, under 20, under 20. Unlike the dollar, this is already embedded. So unless the red line closes over 21, I'm expecting between here and this 100-day average, pros to be selling short, keeping their eye on that. I don't think they'll get out unless you close over a 21 reading. So the bounce there means that the dollar most likely, since this is weighted, about 40% of the dollar index, means the dollar's likely to try to embed. At least that's the game plan, so how I start figuring things out. In the pound, the pound's oversold, getting its bounce back to the 100-day average. The market rode. This was the Gorilla Glue trade. Without today, it has hit every day that number. So will it get away from that? That's when you lose it, that's when the market starts its bottoming process. So we wait to see. The difference here between the other trades is it just stayed right on that Bollinger Band. But again, that 100-day average, never, never, never lose sight of the key. 100 and 200-day averages, when they're by a Bollinger Band and you hit them for the first time, let somebody else carry the rest of the trade is what I teach. Doesn't mean I'm right, but that is what I teach. In the Bitcoin, all right, so Bitcoin China's decided to take on. So first it was they're not going to allow the miners to have electricity, and if they do, whoever's running the province, their head's gone. So that isn't going to happen. You know how that works there. Now the next thing they did is they decided to make all their payment services like Alipay and others, and banks say, hey, we don't want you allowing money to go out for anybody that is speculating in cryptocurrencies. Now I'm not sure of the definition of speculating, but it probably means owning them. If you own them, you're speculating. I doubt you'll have a good word to say you're investing in them with the Chinese. And that's putting more pressure on the market. So we had this false rally off of Elon Musk saying, well, when it becomes green in mining, we'll take Bitcoin. And then we have the monster in the room, which is not Elon Musk, it's the Chinese, saying, you're not mining and you're not going to allow any payment service for it. Kaboom. And you've taken the Chinese out of this market, and they're an important player. So this is another market that has just gone and come down from roughly $65,000. And here you are at 31.8. So explain that play to your wife, or if you're the wife, to your husband. Then we look at the differential between Brent and WTI, and it's collapsing. And again, I'm going to repeat what I said. We're not going to produce more WTI oil. We're pretty much where we're at. You'll get some new rigs coming on as you replace older, non-productive ones and so on. OPEC is driving the day, and that forces the two getting closer together in price. And that began back here in mid-May, and it hasn't stopped at this point. When you look, you still have an embedded reading. Will you get up to the upper Bollinger Band? I don't know. I told my clients, and I'm going to finish with you on this. This is the July WTI. You can see the market. It's going to go off the board tomorrow. I told my subscribers, who I had been recommending, the long side, come out of everything. We got to roll over to the August. It was a pretty good day to do that. So as it worked out, it worked out great. And you hit the upper Bollinger Band, it's time to go away. You want to watch August gasoline now. You want to watch August heating oil. You want to move, I think, now to the August natural gas as well. And you're in this sideways action here. Market's going to tell us what to do. We're in the summertime. The driving is picked up. Look at the traffic. You will see that I'm right. The weekend traffic, I can tell you in Chicago, if you don't get out early, you're caught in traffic. So it's bad, and it's bad all over the country as people are hitting the roads. Now that it's officially summer, remember, today's the first day of summer, everything should pick up from that point forward. Again, I'm going to remind you that we have this coming Wednesday. I'll open the doors at 12:15. You can click up here. You'll see an icon. That's how you register for the live webinar. It is free. Bring your questions on spiders, ETFs, futures markets. I'll be happy to answer as best as I can. It's fast-paced. 15, 20 minutes is what I like to keep it at. I do not post it on the website. You either come, get your questions. I'll do my best to answer as many as I can, or you just miss it. It's that simple. Again, if you have a problem, just call my staff, 866-973-2077. I'll see you in the morning along with our Fed chairman. I hope he's looking at us too. Take care.